Okay, we're recording this video. It is Thursday, 23rd of July 2015. Hope your trading is going well. So we had a pretty boring day's trade on Wednesday. Thought I'd do something a little bit different rather than talk about the markets. I've had a survey running for a fair few months on Emini-Watch, and I thought I might let you in on the results because, well, they're kind of interesting. This is a little survey when you signed up for 10 days to better E-mini trading. If you're interested in that video series, which is kind of plastered all over the website, you could sign up for that. And on day one, after you'd watched the video, there was a little form at the bottom which asked a number of questions. What do you trade? What methodology do you use? What type of chart do you use, and how many time frames do you use? Then what time interval chart do you use? And lastly, how long have you been trading and are you profitable? So, series of fairly simple little questions. The responses have been fantastic. About a third of everybody who hits that page kind of responded, and I got over the last several months about 300 responses for the survey. So I thought I'd kind of tally them up and let you know what the results were. Now in the results you might notice there's a little bit of self-selection bias, because certain types of people have been attracted to this 10-day video series. They kind of are overrepresented, if you like, in the results. So the results are a little bit skewed towards beginner or intermediate type traders who are looking for something new, not necessarily profitable yet, looking around for different methodologies. There's also obviously a bias towards E-mini traders. I think the market in general, in terms of day traders and people trading their own accounts, is heavily focused towards Forex. That's maybe come back over the last several years, but there is an over-reliance, over-bias in these results towards E-mini traders, not surprising with an Emini-Watch website. Then there are traders who are interested in trading volume, kind of overrepresented in some of the results. And lastly, tick bar chart users, because I'm kind of putting forward a volume methodology and a tick-based chart methodology, they tend to be overrepresented in the results too. But anyway, kind of having said that, let's get into the results and see what you think. First of all, what do you trade? Well, over 300 responses, and nearly half of the responses came back saying trade the E-mini. But also interestingly, one of the largest markets is the other mini contracts, the mini Nasdaq, the mini Dow, the mini Russell. So that's the TF, NQ and YM contracts. They're pretty kind of heavily traded in the group as well. Then it kind of drops off a little bit. Obviously Forex, that's a huge market, so we've got a lot of Forex traders there, some stocks, and then lastly kind of oil, options on stocks or options on index ETFs as well, and then ETFs and leveraged ETFs, then lastly kind of gold, bonds and other. But obviously big kind of overrepresentation of E-mini traders, which is kind of what you would expect. For me, the takeaway that kind of came out of this results was, although I say you should stick to one market and just trade one market, most of the responses coming back, there was real polarization. You either traded one market and one market alone, or you traded 3 to 5 different markets, and they were basically 50-50 between the two. On average, the average number of markets traded for the whole sample came out at an average of 2, but that was definitely split. 50% of the responses saying they trade one market alone, and others saying that they traded somewhere between 3 and 5 different markets. So then the next question was, what methodology do you use? And this was very interesting to me. So quite similar to what market do you trade, the average number of methodologies that was mentioned was 2, but again this was heavily split between 50% of the responses came back saying they had one particular methodology that they used. So for example, Bollinger Bands or candlestick patterns, Fibonacci volume spread analysis, something like that, versus the other 50% of the responses came out with a combination of different indicators on their charts, and that was kind of their whole methodology. And out of that grouping, that kind of group of indicators that people were using, the MACD, the MACD, came out as being heavily used, which is quite unusual. I thought the MACD was kind of a fairly old, fairly good trusted indicator, but I thought it maybe kind of fallen out of favor over the last kind of 5 years or so. But no, that's a huge number of people still using MACDs. Obviously moving averages, just because they're so kind of simple and to understand, and all the variations, those the exponential moving averages, the kind of the funky new ones that have been put out by people like John Ellis and so on, kind of included in those moving averages. Then what people call kind of price action, just basically basic price action with a minimum number of indicators, maybe using support and resistance levels on there, but price action as being very important. Stochastics was kind of included when people were talking about using a MACD, stochastics, an RSI or something like that. They would put 3 or 4 of those kind of techniques together and bundle them up and say that's my methodology. Again, just as an input from me, having kind of been there and seen all of this, all of those indicators are based on price, and you're kind of you're using multiple correlated indicators together. And I would suggest not getting much value out of putting 3 or 4 price-based indicators together. But these are the results. Then we come down to volume. People interested in volume, again, I think that's kind of overrepresented because of the people that come to Emini-Watch. Bollinger Bands, and that includes Keltner channels as well. So the channel-based type methodologies were very kind of popular. Market profile and VSA, and then it kind of drops off to momentum, money flow, pivots, and so on. So for me, coming out of this kind of data, the overrepresentation of MACD was really, to me, stunning. I didn't realize that was still so popular. Obviously, VSA, volume spread analysis, for a relatively new approach, I think that's kind of doing quite well. And then the overrepresentation of things like Bollinger Bands, still that people are very into Bollinger Bands, and latterly market profile. I think a lot of people, when I look at all the emails that I get from people using market profile, because they're coming to me and saying, how is Emini-Watch different from market profile, or do they work together, and so on. There's actually a lot of people out there still confused by market profile, having done the courses. They've sold it well as a methodology, I'll give them that. It's got some very good kind of underpinnings, solid underpinnings, but people still come out of it saying, it's confusing and I really don't know what's going on. But kind of interesting that it's kind of there. So there we go in terms of methodologies that the respondents were using. Then what type of chart do you use? Now, not unsurprising here, over 50% of the responses were minute charts, our kind of old faithful type minute charts, and anything from 30-second minutes all the way up to 4-hour type charts kind of going on there. But a fair representation of tick charts in there, again probably overrepresented because of the people that come to Emini-Watch. For me, what was interesting was the number of people that are using these kind of newer chart types, things like the Renko type chart types. So we've got things like Renko and all the variations of Renko, then range charts, case bars, momentum bars and volume bars. They're all quite similar in the way they're kind of constructed. They're using a range or a volume to construct their bar charts, and those are actually coming along and being quite important in terms of the take-up of traders. And so you've got to look at the bar there in the middle for Renko and range, and add that to the bar at the end which says Renko and others. So people saying I use Renko charts as well as tick charts, for example. But obviously still minute charts stand out well ahead as being more popular than any other kind of chart type out there. And then I asked people, what is your primary time frame, in order to get that view of whether it was a minute chart or a tick chart, and how many different time frames different traders mentioned. So this was interesting for me. People came back and said they used a number of different time frames. So a lot of people would say, look, my primary time frame is a 5-minute chart. Fair enough, and they're kind of focused on that chart. But a lot of people, the other half of the respondents, were using multiple time frames. So they were either using 2 or 3 or 4, or there are instances of people using kind of 5 or more, 5 or 6 kind of different time frames simultaneously. So that for me is kind of a good signal, because that shows that people are able to cope with 1 or 2 different time frames. They're using the higher time frames to determine trend, and they're using their lower time frames to determine the entries, which is really kind of solid trading. So half the traders using just one chart type, one different time frame, and everybody else, the other half of the traders, using multiple time frames to get a sense of trend and then entries and so on. So that's kind of good. what time interval charts do you use? And I asked people about their the primary time frame that they were using, and what came back in terms of number of minutes or hours or number of ticks and so on. The information for ticks was all over the map. There were only 3 kind of different tick bar charts that had any kind of number of multiple people saying they use them. Something like a 500, a 1500, or a 233 kind of tick bar chart. Apart from those 3, it was totally across the map. It was extraordinary, the number of people who used tick charts that were using different. There's no consistency whatsoever in terms of tick charts timeframes being used. For the time-based minutes or hour-based charts, there was a little bit more consistency here, and you can see about a third of the respondents kind of coming back and saying the 5-minute chart was their primary time frame, and then they marry that up with something like, the 1-minute charts are quite attractive there, the 15-minute as a higher time frame chart, and then people saying, look, I use day trading, the 5-minute chart for my entries, but in order to get a kind of directional bias, I use my daily charts to get a directional bias, and then I take trades based off a 5-minute chart. So that was kind of interesting there in terms of frequency of different chart time intervals that are being used. Then lastly, kind of the big question, how long have you been trading and how profitable are you? And I decided to do those 2 things. I mean, basically it's the 2 things that kind of come together that are important here. I've broken the traders up, the responses up into whether you've been trading for less than a year, 1 to 2 years, 3 to 5 years, 5 to 10, and over 10. And it was interesting. I mean, the number of respondents that kind of came back with over 10 years was quite large. In fact, about 20% of all the respondents been trading over 10 years, and some traders talked about trading for a couple of generations. They were actually, kind of passing on their methodologies between generations. Just extraordinary to me. So there are only 2 or 3 of those, but they're out there. There are people that have been at this a very long time. So for me, the most important thing that comes out of this chart is the number of people that are break even. It's a huge number of traders who are actually kind of running at breaking, which I suppose is good. I mean, if you've been at this 2 to 5 years and you're not profitable, at least be break even. And there's a lot of people saying, I had a good year, then I had a bad year. Overall I'm kind of break even. Or I'm getting better and better. I've lost money in the past over the last 2 or 3 years, but I'm becoming more consistent, and I kind of count myself as a break-even trader. But if you look at the middle kind of band there, the red bars, the red shading of these bars, the percentage of people that are actually break-even is actually very large. And then as you'd expect, the percentage of profitable traders, as their experience increases, becomes more and more, so that you get to over 10 years experience. We're talking about over 50% of the people who responded are being profitable traders. And again, obviously there is some bias in the data here. The people that are coming and signing up for a 10-day video course from Emini-Watch are likely to be unprofitable or break-even traders, and they're looking for an edge, something different, something new to try. So that's how this kind of data has a little bit of a bias to the kind of unprofitable and the break-even there. So last thing to say is just thank you if you responded to the survey. Really appreciate the inputs that you kind of gave me there. It was fascinating reading everybody's responses, and I hope you enjoyed seeing what some of the other traders out there are up to.